So my client did receive a surprise, very large, in the millions, life insurance settlement from his ex-spouse. They had been divorced for years, not talking, not communicating, but apparently his ex died of some kind of illness. And then he ended up with this giant settlement.
What are we here to talk?
We're talking about money, of course.
Insurance needs after divorce.
Yeah. So what if, let me give you a hypothetical that's not really hypothetical. What if Jade, you had a $1 million life insurance policy on yourself. You went on an adventure race. Something went bad.
Mm-hmm.
You died.
That's pretty bad.
Sorry. But would you like pop out of your grave if you realized that your $1 million policy did not actually end up with your son and that you forgot to change your beneficiary and now you made your ex-wife $1 million richer?
Oh my God. I could die.
Well, you're dead.
Well, I would.
Yeah, you're dead.
Yeah.
You're dead. Yes.
Well, yeah, but I would. But the thing is, that happens though, doesn't it?
It happens. It's happened.
It happened to one of your clients.
It did. And it could happen to you.
Yeah.
To you but it's entirely preventable. So let's dive in.
Cool. So as we said, we're going to talk about insurance needs, which is going to cover the gamut of anything insurance. So what we're going to try and focus on today is, I guess, evaluating those changes to insurance post-separation and post-divorce. Okay, correct?
Mm-hmm.
So we want to also kind of dig in a little bit to health insurance.
Talking about health insurance options.
Cobra. Yep.
And Cobra.
Mm-hmm.
And then, of course, talking about updating those beneficiaries and policy ownership.
Correct, yeah.
Right? So the goal is really just helping you stay in control, right? So if you're going to be divorced, you need to take control of your finances. And to take control of your finances, you need to make sure that you've looked into every aspect. So in this case, insurance.
Yeah.
Why we kept saying hypothetical, not hypothetical, is because I did have a client.
Well, we've both had a client.
We've each had a client. So my client did receive a surprise, very large, in the millions, life insurance settlement from his ex-spouse who they had been divorced for years, not talking, not communicating, but apparently his ex died of some kind of illness. And then he ended up with this giant settlement. Was that by design? Was that by accident? He's never going to know, right? So in his mind, he created a story like, oh, maybe that was his apology to me. But you know what? We don't actually know.
Yeah.
Right? And how about you? You said you had a client situation?
You know what? With that, you think if someone's done that and it was by deliberate, you think you would kind of write that somewhere.
There's no notes.
Yeah. I think it was a mistake.
I think so.
Yeah.
But you said that happened to your client too?
I did, yeah. I had someone where they just actually got a life insurance benefit from just even a friend there. So, where it should have actually probably gone to the new spouse.
Oops.
So, because at the time they weren't married, and so they had the beneficiary. They still wanted to have insurance, and they had it as one of their friends. And they got married, and they passed, and it went to the wrong person.
So let's make sure that doesn't happen to you, and that if you want your kids or grandkids or charity or whatever, if you're paying for a life insurance policy, unless you're really just nice and you want it to go to your ex-spouse, let's make sure it goes to the person or people or things that you want it to go to, whether it's your kids, dogs, whatever.
Yeah.
Okay. Anyway, we'll go into that.
We'll come back into that a bit later there.
All right. So why else do we care about this? Well, I'm a woman.
Mm-hmm.
I hope everybody knew that. But anyway, I'm a woman. And according to the National Library of Medicine, roughly 115,000 American women each year lose their private health insurance in the months following a divorce, and that roughly 65,000 of these women become uninsured. So after that, typically their rates of insurance remain depressed for more than 2 years after divorce. So depressed meaning they either stay uninsured or underinsured. And then when you don't have the right insurance, this could actually make worse and compound the economic losses women experience after divorce, and contribute as well to to make your health issues that you've had get worse following divorce. So I don't know if you want to kind of expand on that. Like, what does it mean to compound health declines?
Yeah. So I think what you're getting at, and my understanding of it is, you might be neglecting a routine medicine that you need to be taking for a certain condition, some sort of preventative thing. And you hear cases of this all the time, unfortunately, where the cost of that medicine, which don't even get me started on the healthcare costs here in this country, but like they'll start skipping it or taking it every other day of daily medicine and stuff like that. And that can slowly, snowball into causing more of a health decline in them.
Right. So maybe you have a health condition that feels minor because right now you're insured and you're getting your prescriptions and you're seeing the doctors you're able to see. But let's say you get divorced and you don't have the right coverage for you and you're just trying to save money on these premiums or whatever. So perhaps you think maybe it's not a big deal. Maybe, let me just save and not take this prescription for a while and let me skip this doctor's appointment. And what was a minor condition or not a condition at all because you were managing it becomes one.
Yeah.
And it becomes more expensive and worse.
And that can look at even, and there's people obviously who do that and go, you know what, I actually still fit and young. I don't even need any insurance.
I don't need insurance.
And unfortunately, like you'll then find someone might get some sort of condition and they need all this coverage and protection. And they're going to be out for hundreds of thousands of dollars.
Or I'm completely a healthy young person, and then oops, I rode my bike and I broke my arm, and I already had credit card debt, and now I have to put this extra $12,000 to put my arm back together on my credit card, right? When I was otherwise healthy.
Yeah.
Right? Stuff like that. Anyway.
So I think where you need to really start is getting an inventory and kind of, I think, sounding like a broken record from both of us is
broken record. Yes.
Let's start at the beginning. Let's document and list all those different insurances that you do have, that
you currently have or need, right? So
it could be in your name, it could be in your spouse's name, it could be in a joint name. Yeah.
Yes. So
you've obviously we already spoke about life insurance, but, it could be homeowners insurance,
renter's insurance.
Correct. Auto, disability, long-term care.
Yep. And of course, health, dental, maybe vision.
Yeah.
Yeah.
So a bunch of different things there.
Yeah.
And you might not have them all, but...
And maybe you feel like you don't necessarily need them all, but you need to think about it, right? And if any of these policies were under your spouse's name, you need to figure it out for yourself. So I would say out of this list, it's the health and dental one, right? So usually, even if both spouses are working, I know I used to do this. We would evaluate which employer had the better, cheaper plan with more coverage.
Or subsidize, yeah.
Yeah.
Not always the employers would subsidize or would subsidize to a different amount there.
Right.
Yeah.
Right.
But yeah, you're obviously wanting to do this audit, I think, for a start, because like as Joe was talking about with healthcare, normally you'd probably be on one spouse's healthcare.
Right. Or if you're a stay-at-home parent, then of course you are on your spouse's plan, right? Yeah. So now you need to figure out how to get your own. You need to make sure your kids are covered, right? Whether you're covering them, your spouse is covering them, you two are splitting the cost, whatever.
Yeah.
So
for like auto, an easy way to do it, I know you were just talking to a client fairly recently, just like
Friday. Yeah.
Like just having a Google, like, best insurance and stuff like that.
Best car insurance. Yeah. And I was mentioning this to Jade. We are not sponsored by NerdWallet, but we might as well should be, because
if you are listening.
Yes, I love NerdWallet. So if you do a search for best car insurance, I do like their list as an example. For car insurance, and every couple of years I do go down the line on the list and get online quotes for each one, right? Just to make sure that I have the best coverage right now for the car that I have, and that it's a good value.
I've always tell clients this, and I've heard it from other people say it too. Like, people are always trying to shop and compare the best phone plan, which is like $60 or something like that. Like, oh, I can,
right?
But these more important tickets in life, some people don't really shop that around on a regular basis.
Or they think they don't need it. And it's like, you need it. So actually, let's jump around a little bit. So car insurance, that's a popular type of insurance that typically gets bundled.
Correct. Yeah. So do you want to talk about bundling for now?
Yeah, let's talk about bundling. So a lot of insurance companies like to say, oh, you'll save money if you do everything with us. Like if you get your homeowner's car insurance, umbrella policy, if you do all of it with us, you'll save money. Yep. It's not true.
We all get it in the mail, like save.
Yeah. It could be true. Sorry. It could be true. It's not always true.
In my personal experience, I've never found it to be better off.
The same for me.
Yeah.
But I don't know if that's because of where we live or the types of cars we have. So it could be true.
So if it does make sense, I guess what we're trying to say is investigate it.
It doesn't have to be bundled.
Yeah.
It doesn't. So.
Because you should also then be looking at what not only the amount that you're paying, but what you're even going to get covered for.
Yeah.
I unfortunately found out recently with my car insurance where someone ran into the back of me that I didn't have, car rental insurance on it there.
Oh, yes.
So then there was this whole other issue that I had to go through. And look, ultimately I got it reimbursed to me, but then there was all these extra steps that had to go through there where I had to kind of claim it through the other person's insurance and stuff. So,
right. So don't be afraid if you're bundled to explore unbundling, right? And, shopping around your homeowners or renters separate from your car.
Yep.
It's okay.
So what about house, home insurance as well as renter insurance?
Yeah. So if you moved out of your family home that maybe the two of you owned and now you're renting, consider renter's insurance. And maybe it's not even a consideration. Maybe it's a requirement.
Yeah. So I found when we sold our house and I started renting, the landlord actually required that I have and show proof to them on an annual basis that you still had a policy in force.
Renter's insurance, right? Yeah. And then for me, I was renting for a bit and hopscotching around, but I was renting from private owners, individual owners. So I guess there wasn't that requirement per se, but I was glad I had it because at one of the units that I lived at, one of the many units I lived at, my next door neighbor got broken into while I was giving my kids a bath. So luckily, we weren't the ones that got hit, but it goes to show that it's worth looking into, because I think if I had been the one that had gotten broken into and they took my stuff and I didn't have insurance, that would have been financially catastrophic for me.
Yeah.
To replace that.
I think if I was to do a generalization, I think most people are uninsured with most things in their life, from life insurance to travel insurance. We even have insurance for when we travel. I don't think most of us are covered for enough. Things cost so much now to replace it. The typical coverage that you get with the airlines is minimal. It's like $400.
Yeah.
Pair of shoes for some people, I think. So,
or one shoe. One shoe. Yeah.
But what about life insurance? We touched on that beforehand, correct? So I think the big one here is
update your beneficiaries,
dude. And what's a beneficiary though?
Beneficiary is who gets the policy value when you die.
Yeah, not the policy value.
Well, the policy death benefit value. Thank you.
Or how many people? Because you get to split
people's
or trust. Yeah.
Or trust or charity.
So are you wanting it to go to your, teenage child who...
Do you want your 15-year-old that's eyeing that Porsche to get $1 million if you croak all of a sudden?
Yeah. If you just have it going in their name, you run the risk of that happening there.
Where they could use it however they want.
Yeah.
Right? Unrestricted. So, of course, you probably do want it to go to your 15-year-old ultimately if something happened to you, but maybe with some guide rails.
Yeah,
right?
bumpers. I call them bumpers, like bowling.
Bowling bumpers, yes.
Yeah.
So how do you put together bowling bumpers for a 15-year-old kid or a 5-year-old to inherit a life insurance policy?
Well, of course, a trust.
Duh.
That's where you get to speak from the grave. And
yes.
So you know what? Whoosh. And so a simple one could be, and look, people structure it many different ways.
Yes.
Anything for education or medical, and then, maybe a percentage or a certain dollar amount after certain milestones, whether it be age-based. I've seen even people putting it down for different degrees.
Yeah. And basically how this works is in a trust, you name an adult that you trust, to manage this money for your 15-year-old or your 5-year-old or whatever, to dole it out to them, right? Until it gets to that point where you are fine from the grave, giving it to them outright.
You know what? It makes me think of someone winning the lottery, because $1 million for a lot of people is a lot of money. And for a teenager, it's
mind blowing.
It's like the jackpot. And how many people who win the lottery end up like spending it all and going broke again?
Yes.
You always hear that.
Yes.
The same thing's going to happen with most 15-year-olds. Would probably,
or toddlers. Yeah.
Like, how many toys would they be buying?
They would buy everything.
Yeah.
They would buy everything. Yes. So if you want to leave your minor children as a beneficiary, just consider getting that trust put in place, and then you name the trust instead of them individually.
Yeah.
Okay.
What about disability insurance?
All right, disability insurance. So look, those are individual policies. So if you had it, you probably will still have it if you're divorcing. But maybe you didn't have it because, if I got disabled, then my spouse's income would cover both of us.
Yeah.
Maybe you need it now when you didn't before. Yeah. Or maybe you had a reduced coverage and maybe you need an increased coverage now.
Yeah.
So
that's more about that one there.
Yeah.
With long-term care insurance, you can get either individual long-term care policies, or you can actually get joint ones.
There's some joint married ones.
Yeah. And some insurance companies allow for you to, I guess, what was Gwyneth's little line? Uncouple.
So if you're one of those people that have a joint policy with your ex, some insurance companies allow you to uncouple and create two policies from the original one. Some do not. Yeah. But the ones that do not, some of them allow you to continue it. So then it would be more a matter of like how the two of you will continue to pay for it.
Correct. Yeah.
Right. Or if you just can't stand commingling with your spouse anymore, you let it lapse and then you get a new one, but it could cost you more.
Well, yeah, most likely it would cost you more. And look, I think in most joint policies, if the couple's around the same age, the insurance company is probably not even banking on or insuring the husband. Like, because they're assuming that he's going to die beforehand. If you look at the actuary tables.
Of course, right. But there's still a cost there to taking care of the dude until he croaks.
Okay.
Sorry. I've used croak 3 times now. Anyway. All right. Back to healthcare, which, in my opinion, the most important out of all of these.
Yeah. So.
Because it's this foundational thing.
I think we spoke about it earlier. Or we were talking about it earlier before recording about like how a lot of couples probably, they're just underneath their spouses, or the other spouse is under one of theirs.
Yeah. One spouse is under the other.
And that presents a problem if you're getting divorced and you're the non-employed spouse, or you're on the other employers.
Or you're self-employed and have no coverage options.
Although there is an option to extend that coverage through what's called COBRA for up to 36 months, it's not an open invitation. There's steps that have to be taken within a certain time of getting divorced to be able to maintain that COBRA benefit.
All right, what's COBRA? Let's back up. So Jade, we're married. I hate you now. We're getting divorced. I'm under your health insurance.
Yep.
I like your health insurance, but I don't have an option to like get my own, right? So we divorce at this time. We divorce. I want to continue your coverage until I figure my life out. So I can sign up for something through called COBRA to be covered up to 36 months under your health insurance, but I have to pay the full price amount.
Correct. There's no
employer subsidy, right? And I have to sign up within a certain period of time from when the divorce is final.
Correct.
So there is a window to sign up for this up to 36 months coverage. And so let's say we sign up for that and I'm like, God, this COBRA is so expensive. I don't like it anymore. There's also state marketplace options that you can look at, right? Yeah. So again, if you don't have your own employer that offers health insurance, we're talking about options, okay?
Yeah. So here in California, we've got
Covered California.
So this is obviously as a result of the Affordable Care Act, Obamacare, whatever you want to call it.
Yeah.
I think, every state now has their own, and it's like a pooled marketplace where you can go to and get insurance for yourself.
Right. And sometimes those options can be cheaper. A lot of times it can be cheaper than Cobra.
Yeah.
Just depends what you need, right?
Yeah.
So it's a marketplace. So there's lots of options where there's less coverage and more coverage.
Depending on your income as well, it can also be subsidized as well.
Yeah.
I'm working with a client at the moment where part of, at the moment her income has dropped. So it is subsidized. She was wanting to get off Cobra and get her own individual policy. We ran the numbers with an insurance agent, and it's better for her to still stay on it at the moment to maximize that 36 months because she's getting that subsidy there.
You also wanted to talk about Medicare.
I did. So Medicare is another big one that affects, I guess, people approaching, around that 65 age number. But Medicare insurance is, you can actually shop the whole market by going, there's a cost for it. But I know I work with clients where we'll kind of pay a one-time cost where, this service will do an analysis of all the plans and you kind of put in what different medications you take or preferred doctors.
Who your doctors are.
Yeah. And it will kind of come down with the top 3 and it'll justify why. The good thing about going through someone independent like that is you can't place the insurance with them. So they're really neutral and third party. You will then have like the plan number, and then you can actually go request that specific plan number.
Whereas
and they'll walk you through holding your hand through the process. So I think that's a really good thing for Medicare.
So that's like a paid search, right?
It is.
It's paid, but then it's impartial, right? Because if you go through a broker, the problem is maybe they only represent 5 insurers or something.
Or incentivized by a certain provider.
Yeah. So we talked about this stuff for you. If you have children, you got to figure out their health insurance too. So this is all part of your negotiation, right? So for example, for me, I negotiated with my ex that he would cover the kids under his health insurance because he's like a corporate worker. He's always going to be working for an employer.
Hopefully.
As far as we know. Yeah. Right? So he's going to pay for their insurance and I just have to figure out mine. But it's different for everyone.
And you had that written into the divorce decree.
And that was written in the divorce decree.
Yeah.
Yeah. All right.
Cool. Well, that brings us to the end of another fun,
fabulous episode, this time about insurance. So what we talked about was evaluating changes in insurance coverage post-divorce.
We also looked at addressing, health insurance options, including Cobra coverage.
And considerations for updating beneficiaries and perhaps the best way to update them, trust or not or whatever, and policy ownership.
Correct, yeah.
So we'll be back soon.
See you in a couple of weeks then, yeah?
Yep, this is Josephti and Jade.
Talk to you next time.
All right, bye.
Bye.